Hey friends, Kevin Goehring here, your Sacramento Stockton area realtor and lender here with this week's weekly real estate report. But wait a minute, I didn't do one last week, so I guess that means this is now the bi-weekly real estate report. Sorry about that, but anyway, the data is still good. Did my data, never fail. Just didn't have the chance to get the recording put out last week. So let's take a look at what's going on in the market. Wow, take a look at the green line. 3 weeks in a row, we're starting to see a little bit of a drop in that inventory, but the overall big picture is, well, the smaller picture, I guess, is we're still kind of on a high, but the overall big picture is that it is still a very low inventory. I mean, we're still barely over 3,000. That's equal to the dip of the year before. It's still lower than the dip from the year before that. And so really our peak right now still looks like the trough of most normal years, which of course is still driving prices up, or at least keeping them up. So if we take a look at the pending sales, that is going quite well. It's plateaued out. But I think a lot of that plateau still has to do with the fact that there just isn't a lot of inventory and we still have an affordability problem. And by that, I mean, if you're out there looking for a home right now, you understand that there's still multiple offers on most homes if they're priced well. Now, if it's priced terribly bad, it's really high, then everybody backs off and says, well, let's wait and see what happens. And so that home just sits. But for the most part, homes that are priced well, they're selling in about 14 to 20 days. That's about the average on market day for something that is sold. If we look at the average days on market for just what is available, it's much higher. It's in the higher 20s. So you can see that this disconnect between what the average of what is sitting versus what is sold. So priced well, it's going to sell. Where do I kind of see this headed and what's driving it? Well, there's a lot of moving parts to this, but one of the things that I see is that as home prices would start to come down, if they would, we have a lot of buyers who've been waiting to get in. Because really right now, we're talking, most first-time home buyer homes are above 400,000 right now. So we have a lot of people in the wings waiting for that price to drop. And as soon as it does, they come out and buy. So I don't think we're going to see, especially first-time home buyer homes, drop very much at all. If it drops a little bit, buyers are there waiting to jump and go. But we do have another problem over here on the side that is looming. And let's talk about that, which is rates. So what did rates do this week? Well, rates, Freddie Mac is reporting mortgage rates jumped above 3% this week. A lot of things going on in the market that is driving that. So first rule is the Fed does not decide what mortgage rates are. Never has. I shouldn't say never will, but it just drives me nuts when I see these pop-up ads. Hey, Obama urges you to refi. Trump urges you to refi. Well, now it's Biden urging. No, none of the presidents are urging you to refi. I promise you that is probably not on their desk. They don't care if you refi or not. It is not something that's on their radar. So, your government does not want you to refi, I don't think. Anyway, it's certainly not the president's. But mortgage rates are above 3%. Why are they above 3%? Well, it depends on where you want to go with this. Well, the Fed does not control rates, but what the Fed says does have an effect on what rates are going to do. So for example, the Fed is indicating that right now they're buying a lot of mortgage-backed securities. The Fed is pumping a lot of money into the market. And the Fed is saying, we are going to start backing off from this. Well, okay, so that has an effect. Investors get a little worried about that. They move money around. And before you know it, you've got to offer a better rate for people to buy mortgage-backed securities. Well, if you have to offer them a better rate to buy the mortgage-backed securities, we have to charge the borrowers a better rate so that the investors buy the mortgages, the mortgage-backed securities. You take the mortgages, you bundle them together, you sell them as a big bundle. So there is that. There is also on another side, some investors or some commentators saying, really this is just a seasonal thing. It is a kind of a known fact in the investing world that October is actually kind of a bad month for investing. in September, we're here getting ready for the last quarter. And so what happens is you have a lot of people managing their funds. They want to sell off. So there's a sell-off so that they can show the profits on the books. A little more complicated there. But anyway, you just get a sell-off and the market doesn't look good. And things move around. So, it's a lot, like I said, a lot of moving parts. What does it really mean right now? Well, rates went up. So that is the fact. Rates went up. And what happens when rates go up? Home prices come down. Why? Because even though we don't normally talk as much about in homes, we usually talk about the price of a home. How much is it? It really, the bottom line comes down to how much a borrower can afford per month. And if the rates go up, they can't afford as much. And so the pool of buyers drops off. Pool of buyers drops off. Homes don't sell. You have to lower the price to get people in, but the mortgage payment stays the same. So lots of stuff in play. Where do I see this going? Oh, boy. It could go anywhere, really. When I first got in the industry some 20 years ago, one of my mentors, Spencer to be in fact, I said, Spencer, man, hey, what do you think rates are going to do this week? Oh, Spencer, man, he's a great mentor. He says, Kevin, I need you to get a pen and a piece of paper. I want you to meet me in my office in 5 minutes. So I get my pad, my paper, my pen. I go in, I sit down in front of Spencer. I'm ready for, just a wealth of knowledge. And Spencer says, write this down. He said, rates could go up. I said, all right, rates could go up. He said, now write this down. Rates could go down. All right, rates could go down. So now what? He goes, no, there's your answer. Rates could go up. Rates could go down. He said, Kevin, if we could predict what rates are going to do tomorrow, we would all be filthy rich. Nobody can predict it. If we could, it'd be a whole different world. So rates could go up. Rates could go down. Who knows? There is some part, though, an educated guess. Rates don't have a lot of room to move down. We are facing a lot of concern over inflation. And, concern, I would say we are in inflation. Look at fuel prices, look at home prices, look at grocery prices. You go out, it costs more for everything. Inflation is going to cause rates to go up. So I think rates are going to go up. They really don't have a lot of room to go down anyway. So it doesn't take much of a genius to say they're going to go up. They're already very low. So my advice, if you're out there, now's the time to lock in. Rates could drop a little bit from where they are right now, but they've got more room to go up. So Freddie Mac is officially saying 30-year average fixed rate for last week was 3.01% with 0.7 of a point. I think that's right now a little bit higher. So we're going to see another raise next week when Freddie Mac comes out with their survey. So that's what I have to say for this week. Weekend's coming up. Have a great weekend. I hope to see you here next week. Take care. Bye.